Hey, Colorado Springs, Chris Lopez here, and today Jenny and I are going to be going through a deal analysis on a townhome that Jenny recently closed for some clients. So, Jenny, good morning.
Good morning, Chris. How's it going?
Really good. I always love talking about the deal analyses and just the story behind it, along with the numbers. So I know this one, like all deals, has a couple interesting, perspectives to it. But before we get into the specifics, just set us up to like the profile of the buyer on here, of the investor, if you could.
Yeah. So Leah was the buyer's agent on this, and I was the listing agent on this. So I have a full like kind of scope of what we're working with here. So Leah's clients, they are a couple that are looking to get into real estate investing long term. They both have really good jobs. Kind of the same old story that we hear from a lot of our clients. They're just looking to add a couple properties, to their portfolio for retirement supplements, down the road. So they were looking for their very first property, and they were kind of, hoping to stay at 250, which we kind of warned them that in this market, that's very hard to find, but we'll do our best, to do that. Meanwhile, I had my clients that had purchased a property back in 2020, fall of 2020. They were looking at the equity that they've gained based on market value and where they bought their property from. And they said, hey, we can sell this townhome and trade it into a brand new townhome, which for them, that's their preference because it's less maintenance. They already own a very similar product, so they know what to expect in terms of rents and layout and all that good stuff. So that was their preference.
So they do a 1031?
Yep. So they're going to,
cool. Okay.
We haven't closed on the replacement property. It's still being built, but yes. So they're going to 1031 the townhome into a new build townhome. And they had purchased the previous townhome, the relinquished property at 190, and they only put 15% down. And they're able to trade into their new build townhome with 25% down, even trade. No reaching into their wallet for that. So that was something that they were really excited about. So basically we said, hey, you know what? We have Leah's buyer clients are looking for exactly what you're looking to sell. Let's make this happen. Very simple transaction. Everything went well. It appraised well. No inspection issues. So everyone walked away really happy from that.
Well, that's great to hear. And as a side note, as the that other transaction closes, that'd be a really cool deal analysis or like return on equity analysis to do.
Yeah.
Just because it's been, that's the opportunity we're seeing in the market now. After a couple years, there's potential for some trade up like that. So it'd be great to talk numbers because that's a relatively short time frame for doing a trade up, but it's an opportunity right now.
And I really like their way of thinking about it too, because most people think trade up has to be a bigger asset, like more units or whatever. They traded up from a headache perspective because there's more deferred maintenance on an older home. The townhome was built very, very well, but they wanted something brand new with a builder's warranty, bumper to bumper, that sort of thing. So it all comes down to personal preference in that case.
Yeah.
So I think that's great. Just another example to highlight.
So I am pulling up the spreadsheet here, and what we're going to do is we're going to talk about the numbers, plug them into the spreadsheet here live. And so this is Joe Massey's spreadsheet we use with Castle and Cook, and it's a spreadsheet we use a ton for housing properties. You can go download it off the website in the free toolkit, and we will keep the numbers very high level on the video and the podcast here, but go to the show notes and you can see all the screenshots and numbers on there if you really want to drill into it. So this is a Colorado Springs townhome investment property. And you said you said they wanted to stay around $250,000, right?
Mm-hmm.
The investors. So what was the purchase price of this townhome?
$250,000.
Oh, spot on, huh?
Yeah. Well, yeah, I had run a lot of comps for the sellers, and 250 was what I had it priced at, and said, "Hey, guess what? Hey, Leah, I think these match your buyer's profile too." So
What's the ballpark acquisition cost?
about 5,000.
Okay, leaving $1,500 for loan cost. And what was the inspection, seller credits, anything along
Nothing.
those lines?
Nope.
So no seller credits. Any initial repair cost?
No.
All right. So, and what was the down payment?
25%.
25%.
Mm-hmm.
So 25% at $250,000 plus some acquisition cost. They were all in for about $69,000. So just under $70,000.
Mm-hmm.
And what was the interest rate they got on the property?
So I had asked Leah yesterday to look into that for me while I was preparing this, and we both. It was only a short time ago that this property closed, and we were both so shocked when she came back at 3.875.
All right.
Like, it feels like
So
forever ago we were talking about interest rates in the threes, but here we are.
they change fast.
Yeah.
So we'll run it at this number, then actually we'll come back and run it at kind of today's higher interest rate as well for some what if scenarioing.
Yeah.
And what about the rents on this property?
So that was the key factor, I would say, for the success for the buyers in this property is that my clients, they were renting it out to tenants they had a year lease in place, and then they went month to month. And then the tenants decided that they were going to move out at the change of ownership. So they were renting it at $1,300 a month. Just good paying tenants. So why rock the boat? I kind of, operate in the same way. But they fully vacated. So these new buyers, they figured that market rent was $1,600, and they got $1,600.
Oh, all right. So $300 rent jump.
Mm-hmm.
$16 a month in rent. And this was it's a 3-bed, 2-bath, right?
No, it's a 2-bed, well, like 2 large beds with ensuite bathrooms, and then so 2-bed, 2-bath upstairs, and then a half bath downstairs.
Okay.
It's a really good layout, especially for a roommate situation.
Yeah. So basically 2 master bedrooms.
Yeah. Yeah.
So I think we keep vacancy at 3%. We'll keep annual rent at 3%, annual appreciation at 5%. Property management, are they paying for property management?
They are. So this is part of their long-term plan. They don't want to be really involved at all. So their management expense is 10%.
And monthly reserves, it's a townhome. You said a little deferred maintenance. So what would you peg this at?
5%.
Okay, so 5% of rents. And HOA?
Yes.
What's that at?
236. So kind of steep for around here, especially considering it's really just trash roof and like covenants.
Yeah. That's
It's pretty steep.
What are taxes like?
Really cheap. So 600 a year. So hopefully that makes up for it. And then insurance is following suit at about 500 a year.
Okay. Any utilities or other expenses that the landlord, the owner, is paying?
No.
All right. So we're going to jump over to the cash flow tab, which shows us some returns. So to recap this, it's $250,000 purchase price. 25% down is $69,000 cash all in. Rents of $1,600 a month coming in. We annualize everything, subtract out expenses, subtract out mortgage payments, and it cash flows about $1,200 a year or $100 a month.
Mm-hmm.
So that brings us down to like a 2% cash on cash return, a 4.7 cap rate, and an overall return like 28% when we look at appreciation, cash flow, debt pay down, and depreciation. What were the client's reaction to these numbers?
They were happy. It was everything that they wanted. So
perfect. That's what matters the most.
Yep. It was everything that both parties wanted. So, that's kind of the key right there, is that everyone walks away happy. So,
All right. So I know I
Yeah.
went through those numbers fast. So about $100 a month in cash flow,
Mm-hmm.
a 4.7 cap rate,
Yep.
and that overall return of all four ways to make money in real estate, which I think becomes really important in this environment we're in right now, an estimated 28% return between cash flow, depreciation, appreciation, debt pay down.
Yep.
So, and the plan for this investor is just buy and hold.
Yep.
All right.
They've completely turned it over to the property management company. So I think their goal is to not think about it.
Great. So let's come back here. If we have, I think we have a couple minutes because it's 3.875. I mean, your reaction when Leah told you this kind of says like, "Wow, I can't believe it was that low that short time ago," which was probably what 8 weeks ago from the time of recording.
We closed in March.
Oh, even closer. So 6 weeks.
Yeah. Yeah.
We're recording this kind of end of April right now.
Yep.
So if someone closed on it today, where would that rate be at?
Oh man. I'm hearing high fives, low sixes. I don't know. So pick your poison.
Yeah, we can say, let's just say 5.75. I don't. And again, we're not lenders, and the rates they're changing, they're bouncing around, but I think that's a good ballpark estimate. So that went up basically 2 percentage points. Let's see what that does to cash flow. It takes cash flow from 1,200 positive a year to 1,300 negative a year. So basically, that swing is $100 positive a month to $100 less a month. So a $200 swing.
Yep.
So what that does, it does make it a negative cash flowing property with all those underwriting assumptions at $100 a month. Cap rate stays the same at 4.7. The overall return is still about 23%. So overall, still high return, but now slightly negative cash flow. If those clients were buying this today, I don't know if you know this, 2 months later, what would they say to this number, do you think? Because they're very much sounds like long-term, retirement type buyers.
I would hope they have that long-term perspective on things. $100 a month out of pocket. I don't think that that's enough to really scare me away. Buying an asset at way below median price in a very strong market. So I think that I would hope that they'd have a long scope on that. And, I'd love to look at the long-term analysis tab too, to see what year they're expected to start to break even. Cause I bet you it's not too far away.
So at these assumptions, year 4, year 5 would be the break-even cash flow.
Mm-hmm.
So now let's go back because this is fun. So year 5, year 4 or 5 is when it goes from like the positive cash flow based on that new interest rate and a annual rent increase of 3%, which this is one of the crises I'm going through right now, Jenny, as you know. I like to estimate conservatively, but I'm like, reality is so much more different than that. If you even put that 6%, I think is a reasonable expectation when last year they were double digits, and this year we're kind of seeing similar trends. Now the positive cash flow happens between year 2 and 3.
Yeah. And then look at the equity too. I mean, you're estimating 3% appreciation.
5% appreciation.
5%. Okay. Which I think that's reasonable. Yeah.
Yeah.
So yeah, it just goes from 77,000, which includes their down payment. And then year 3 is 109,000. So about a $30,000 jump. So that's pretty good.
Yeah, and you're going to hear us do a lot more about this and talk about this, but I think it's worthwhile to play around with these assumptions on here, see how like years 2 and 3 look out. Now, of course, take it with a grain of salt because are rents going up 6% every year forever? No. But for next year or two, they may be higher than that, so we might see a rent spike and then things start softening or getting flatter in a couple of years. Same thing with price appreciation. But understand that's part of the market right now that we can expect to see that price and rent appreciation. And so play those what if scenarios appropriately to make sure you understand what they look like and what you're good or not good with. Jenny, any other things you want to play around with on here? Numbers, scenarios? Or what would you put rent increase at?
I don't know. I'm so scared to like overestimate on that. And you know me, I'm pretty bad about raising rent. With the exception of a turnover, especially when the tenants have been really good and paying on time and all that. So I'd probably keep it at 3 and then just be pleasantly surprised, as nature takes its course that way.
Yeah. Like I said, no right or wrong here. We just want to start presenting different options with what's working in the market right now and how we're looking at clients are looking at it. Mm-hmm. So Jenny, this has been great. I always love learning deals about what you and Leah are doing down there in Springs and Pueblo with your team. So thank you. And if anyone has questions on this property, reach out to Jenny. If you want to discuss your options and put together a game plan for investing in Springs or Pueblo or anywhere in Colorado, reach out to us. Go to the website, click on investment consultations and the links, and you can connect with me or Jenny. And we would love to sit down and talk with you and help you navigate this market. So thank you. And Jenny, thank you. Have a great day, everyone.